Welcome to Q&A Wednesday. I'm your host, Dawn Connors, and today the question of the week is, what is the difference between interest rate and APR? Before we get started, please like, share, and subscribe to my YouTube channel. I put out videos multiple times a week so that you're in the know on mortgage facts and findings. All right, let's get started. So an interest rate is the actual interest rate that you will pay for your mortgage payment. So for example, let's say that you borrow $100,000 at 5% interest rate, then that payment will be reflective of that interest rate of 5%, and that's your interest rate, that's your mortgage payment. APR is something entirely different. It stands for annual percentage rate, and it's the cost of credit over time. So it factors in your starting closing cost, any other fees that you pay, like PMI insurance, private mortgage insurance, if you don't have 20% down, and it puts that into a percentage. The purpose of an APR is so that you can rate shop and see what your APR is across the board with other lenders. So when you look at interest rates, you not only want to look at the actual interest rate and the payment, but you want to look at your APR and see what is going to cost you over the entire life of the loan. So where I said a $100,000 loan at 5% interest carries a certain payment, this will take into account, let's say you have $3,000 in closing costs, you have that same 5% interest rate, and let's say your PMI insurance is $75 a month for the next 5 years. Well, the APR will factor in those type of costs and put it in an interest rate form so that you can see what that interest rate will be over the life of the loan as compared to other lenders. So what do you do with that? Well, the key is to get an itemization of a breakdown of your cost from 2 to 3 different lenders and do a comparison, an interest rate comparison and an APR comparison. So you can see what the actual interest rate and the payment is, and then the APR, the annual percentage rate, spread over the life of the loan. So you can see in 5 years how much you'll pay, in 10 years how much you'll pay, and over the life of the loan how much you'll pay back to the bank. This is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions for you and your family so that you're in the know before you buy. Thank you and have a wonderful day.